Thank you for tuning in. Andreas from Simply Explained here. And in this video we're going to talk about the merger between Aphria and Tilray. This is a market mover event. It's a 4 billion all-stock deal. And in this video I'm going to communicate the aspects, sort of what's in the deal, what's the most important things you need to know. How did the stock market react? And I'm going to finish off with a conclusion and some few future-looking statements of my own. And the information herein is from Bloomberg, The Street, CNBC. I pieced together the most important things for you. So let's get this going. The deal is Aphria, is Tilray. They're combining to make a new powerhouse, about 2 times bigger than industry leaders such as Curaleaf and Canopy in the domestic market. And how is this merger going to happen in practice, so to say? Well, Aphria shareholders will receive 0.8381 shares of Tilray for each Aphria common share that they own. So that's trading at a 23% premium. That will bring up some goodwill in the balance sheet of the new company. But we also see potential for synergy effects, more on that later. We also say goodbye to the old Aphria ticker, as the new ticker of the new company will be Tilray, traded on the Nasdaq. As of ownership, 62% of Tilray stock will be held by old Aphria shareholders. As I said, it's a big merger, a big move, positioning the new company to be ready for when US states legalize pot. We also see here in Europe that more and more countries are opening up to medical use. We see that Aphria, they have some very attractive assets here. More specifically, German assets, a distribution center and a cultivation facility. So nice position in Germany, a very, very nice position over in Canada, and a good position to be ready for US legalization on the federal level. We don't know when this will happen, 3 years, 4 years, who knows, but it's good to be prepared. We also see some overlap here. This is not something I'm not too particularly happy about, but we see Aphria, they have acquired Sweetwater Brewing Company, and Tilray, they have a partnership with Anheuser-Busch. So some overlap there. I don't know how they will continue moving on in the forward, but I hope to see a plan there going forward, how to streamline process. Well, the stock market reacted positively. Yesterday, Tilray was up nearly 21% and Aphria rose by about 12%. If we look year to date, we see that Tilray shares have been falling. They lost almost half their value in 2020, while Aphria shares have gained. So they're Aphria, a rising star, and Tilray, a dog, so to say, divested, harvested, I don't know. They haven't performed very well this year. Maybe Aphria management saw a good opportunity to acquire assets at a good price. I don't know the reasoning behind it, but it's going to be nice to follow along. At least we know that there's going to be a lot of synergy effects. So, synergy effects, let me talk about that first. The company reported synergy of $100 million US. That's what they thought that they were going to get. And stock market reacting positively shows that investors have some confidence in that as well. And what do I want to see personally? Well, this merger will bring some goodwill on the balance sheet. And I want to see the synergy effects being a great positive addition to the yearly results, so to say, because we know that goodwill is being written off, usually in a 5-year plan with about 20% of goodwill each year. Maybe they do some other accounting principle, I don't know, but I want to see the synergy effects covering up for this. Otherwise we're going to see an effect on the results in the coming years, putting pressure on the stock potentially. Anyways, purely from a financial and an accounting perspective, this merger makes it harder to analyze results over time. Comparing pre-merger earnings per share, for example, it's going to be hard to adjust for this merger. I know that people with very good accounting skills find this easy, but personally I believe I have sort of average skills in this area. So it's going to be a challenge that I will face head on and do my best to overcome in the future. And also, this new Tilray company, it's going to be an alluring safe haven. It's going to be a big company, 2 times larger than the next player in the domestic recreation market in terms of market share. And this could lure in new investors. It could be very alluring, seen as more of a safe haven, and put pressure on the demand side, so to say, more demand for Tilray stock. That could have a positive effect. But heads up, I believe that this is not the first merger that we will see in the Canadian pot industry. More will follow as the industry matures and consolidates. Now, short term, this merger, it's been a very nice boost to shareholder value. Of course, I'm grateful for that. Very happy. Looking forward, I want to see synergy effects being greater than the tax write-off of goodwill. So that's going to be interesting to follow. I'm still holding the stock that I bought back in August. Still bullish on the industry as a whole. That's been it for this video. Thank you for tuning in.